What's going on, YouTube fam? It's Coach Mo in the building. I'm back at you with another one. So I'm finna teach you how to properly read a credit report and prepare so when you go into funding, make sure you address all your negative items. So let me just pull up this credit report here. We'll switch to classic mode. Now, the first thing we do when we analyzing the credit report, because lenders look at your credit profile, they don't really care about your credit score to a certain extent, but they're looking at your overall view of your credit report. So we got to get things in order. Now, first thing I like to do, or what anybody like to do when you're repairing credit, your own credit or somebody else's credit, you want to make sure you look at the personal information and make sure that information is accurate. So the first thing we do is look at the names. We're going to look to see if all the names are spelled correctly, because believe it or not, wherever you put your information, whether you gave it to someone over the phone, your information could be plugged into a system misspelled and it's showing up on your credit report. Or you could be mistake as your father because you're a junior, your dad is a senior. So we want to make sure that our name is spelled correctly. Once we figure that our name is spelled correctly, we'll move on. And if we find errors that our name is spelled incorrectly, then we'll notate that. Next, I want to look at our current address. Now, your current address should be the same address across all three credit agencies. And if it's not, then this is inaccurate. So you want to get your current address only with your current address. And all these addresses at your previous spot, you want to get those removed, because some of y'all got your grandma address, your mama address, you ain't lived there for 10 years, you got your baby mama address, you got your girlfriend address. You want your current address, all old address, you will have to get those removed. Next, we want to go to the employer. Now, if you're self-employed, please do not put you self-employed. And if you retire, please do not put you retired, because this is going to knock you out the box of funding, because no banks like to fund people that, one, are self-employed because their job is unstable. Two, if you're on a fixed income. So whenever we put an employer, if you are self-employed, you want to put that you are an employee of your own business. So if you own a plumbing company and it's called DJ Plumbing Company, you are an employee of your own company, DJ Plumbing Company. If you are retired, we don't put that we retired. We'll put that we still employed by the career or the job that we retire from. That still goes on your credit report, because we want to look stable as possible. Now, before we move on and dispute anything, we want to make sure that our name is spelled correctly. And if it's not, we're going to make a phone call to the credit agency and we go tell our name is spelled 1, 2, 3, A, B, C, D, E, F, G. And then when it comes to our current address, we're going to say our address is 123 Main Street, and all these old addresses don't belong to us. Please remove them. And when it comes to our employer, we only got one employer on our credit report. We don't want to have 9 different jobs, because that shows the banks that you unstable, you can't keep a job, and they don't want to lend to you because they don't know when you go get fired or when you go quit your job. So one name, one address, one job. Now, as we get that out, we'll come right here and we'll analyze. We know that this account has 15 total accounts across all 3 credit agencies. We notice it got 6 open accounts on this credit agency, 6 accounts open on Experian, 5 accounts open on Equifax, 6 accounts open on TransUnion. Now, whenever you see delinquency right here, that means it's a late payment. So on TransUnion, we got 3 late payments. On Experian, we got 3 late payments. And on Equifax, we got 3 late payments. Now, when it comes to derogatory accounts, these are negative items. Whether it's a charge-off, collection, or late payment, they are all negative items. So as we can see, we got 5 on TransUnion, 6 on Experian, and 5 on Equifax. Now we'll go down to your inquiries. If we got public record, if you got a bankruptcy, you'll see bankruptcy here. We don't see none on this credit report. Now, when we go down here, we're going down to the inquiries. So it's good that we don't have no inquiries on TransUnion. We got 2 inquiries on Experian, which is not bad. We're still in the runnings to get some money, and 0 inquiries on Equifax. Now, when we're scrolling down here, we want to make sure we get to our negative items. Now, I'm going to look, and this look like a closed account. Let's see, look like a mortgage company. So cool. We love to see green, y'all. Green is for the money. This means you're paying your bills on time. We always want to see green. So we scroll down. This is a transfer. So this is another mortgage company that was refinanced, which is good. So we like to see green. So we don't worry about positive accounts, right? If it's positive and it's green, we don't care about it. We want to keep that report, and that shows good data for us. Now, as we get right here to Bank of America, also it's good. We got 100% green. That is great. It's an open account. Discrepancies, maybe it's terminated, maybe it's open, but it says open, so we're going to treat it like it's open with a $3,000 limit. That's good. It'll come to another Bank of America account. Now, when we go to account status, we see payment status and account status. Account status says close, and it says, and the payment status says a charge off. So we automatically know this is a derogatory account. So now we gotta look at this. Now when we analyze a negative accounts, this is the first thing we want to look at. We want to go line by line. Remember, everything when it comes to your credit report has to say the same exact thing, or it's inaccurate, other than the credit score. The credit score is going to say totally different, 3 different credit agency credit scores. We're not worried about that. We just were worried about how they is reporting this Bank of America account on the behalf of us. So first thing we do is look at the account number. And we see we got 4 stars here, 4 stars here, and voila. We have an account number, but these other agencies are just saying star, star, star. So right here, this is inaccurate. Next, we're going to go to the high balance. We see they pouring 1,500 here, 0 here, 1,500 here. So remember, they got to say the same exact thing. So right here, we've seen 2 inaccuracies on this reporting account, how they're reporting on our behalf. So what we do is we take a highlighter and highlight all the inaccuracies. You can't depend on the credit agencies to do what they're supposed to do, because they not. Sometimes you got to play your own lawyer, and you got to go out there and get your own evidence, and you got to present it to make your case stronger. And that's what we're doing right here. So last verified date, June 16, 2026. They said nothing. So how can they say this is a charge off if they never verified this account? Right here, we got 3 inaccuracies on this one account, y'all. Now we go to the last date. This means the last date that this account was active. So the last date that they report that this account was active was October 10, 2023 for TransUnion, and then it says April 1st, 2024. Then it says October 1st, 2023. Right here, we got 4 inaccuracies, right? So somebody information is not accurate, right? One of these companies said the last time this account was active was 2023, October 10/10, and then Experience said, nah, this account was accurate April 1st, 2024. And then Equifax said, nah, this account was last active October 1st, 2023. So nobody got their stories correct. It's like going in an interrogation room and y'all trying to tell the truth, but all y'all got different stories. I can't believe none of y'all because you ain't got the story together. So that's 4 different accuracies, y'all. Last time the day was open, they said November 7th, 2022. This was said November 1st, 2022. And both of these got it correct. But, however, TransUnion didn't get it correct. So this is another inaccuracy. So we'll highlight that just like that. Go down to balance owed. It says 1,500, 1,500, 1,500. So they all got that correct. Kudos to them. About time. Close date. So last day this account fell off and went into foreclosure or went into closure was 10/10/23, but these people don't know when this date was closed, right? So how can they say it's a charge-off? This is another inaccuracy, y'all. You see, you start getting the point that I'm going line by line, pointing out all the obvious inaccuracy. This is why 85% of credit reports are inaccurate, is because, as you can see, we just found about 5 or 6 inaccuracies on this one account. It's just one account, y'all. Just one. Carry on. We go down here. Derogatory. We're good. Individual. They report individual. Account not disputed. So when it says account status not disputed, that means nobody challenged this account or nobody challenged the accuracy of this account yet. So that's why you don't see account not disputed. Creditor type is telling you it's a bank card. So creditor type is telling you it's a bank card. So it's an old credit card or something that charged off, they didn't pay the bill. Payment status, meaning that a charge-off goes into 4 late payments before it's considered a charge-off. So now the payment status the bank said, man, if I ain't got my money in 4 months, we just go write it off because the chances is I ain't getting my money. So that means charge off just mean they just wrote it off on their taxes and they took a loss on it. Go back to payment amount 00. They reported last payment. So they said the last payment this person made was July 15, 2023, July 15, 2023, and then Equifax said October 1st, 2023. Once again, inaccuracies right here, so we highlight that. Go down here, they got it together, boom, boom, boom. Credit limit was 1,500, and they had no credit limit. Remember, charge off, I'm supposed to have no credit limits on it because the counters charge off, because when they keep the credit limit reporting on your credit report, it makes it seem like you have high utilization, and it makes it seem like the credit, you are using more credit than you already got when this account is charged off. So that's an inaccuracy. All right, so whenever we see black CO means charge off, right? That's what we don't want to see. And when we're going to some funding purposes, we have to delete those accounts. I don't care if you got a charge off collection and you worked out a deal with the collectors and you said, as long as if you worked out a payment plan and you paid them, and then when they got their money, they still left it on your credit report, and the only thing they changed was paid to agree, guess what? It's still a negative account on your credit report, and it still goes hold the same negative effect when it's time to go get some money from the bank. So if that's you, remove it in its entirety. I don't care if you paid it, remove it. Once again, come here. This is all good. We don't have to do nothing here. Everything is green, y'all. We like that. Green is for the money, y'all. Keep going. Also another charge off here. Same thing. We'll do the same exact thing. We'll go through all the accounts. This one is inaccurate, right? Why, y'all? Because this one is saying 4 stars. This one is saying a whole account number. Balance. This one's giving a balance of 1482. This one giving 0. This one giving 480. This is whole inaccurate. They off by $2. I don't care if you're off by 50 cents. It's inaccurate because it's not the same. Last verified, they don't even know. They said June 11, 2026, a couple months ago. Go here again. Last reporting date, it said October 9, 2023. This one says 5/1, 2024. They just not getting their stories together, y'all. We can't believe these credit agencies, right? They just not getting it together, because if they would have did their due diligence and they would have did their job, they would have caught the same thing we are catching right now. But they don't. Why? Because they get paid to report negative items on your credit report. If I want to report something on your credit report, I just call the credit agencies and say, John Doe owe me $10,000. Because I have the money to pay them to report that, guess what they're going to do? They're going to put that John Doe owes me $10,000 in collection. They're not going to call John Doe as they supposed to make sure that the information I am telling them is accurate and that they owe me the money. They go shoot first, ask questions later. So this is why you wake up, you got collections on your credit report, and you don't know what happened, and now they just say, well, it's up to you to get them out. It's up to you to find out if this information is inaccurate. I think it's unfair. Again, same thing. We go line by line. They got it together here. They got it together here, surprisingly, but this is inaccurate, right? Because they're saying June 1st, June 9th, June 11th, inaccurate. So charge off is a charge off. Count as a bad. See, it says charge off, bad debt canceled by the guarantor. So it's bad debt. They already charged it off. Once again, we come here and we keep it going. Charge off. Let's try to find your late payment so we can show you how to look at late payments and stuff like that. Boom, boom. All right, cool. Now, this is late payments, y'all. So now, this account is a student loans. You know, a lot of y'all probably got them and they report late. Now, when we're looking at late payments, remember, late payments should say 30, 60, 90, 120, 150. Now, as you can see, it starts with a 90, and then it goes to 120. Remember, you can never get a late payment of a 90 days late without getting a 60. You can never get a 60-day late payment without getting a 30. So right here, this whole account is inaccurate. Why? Because we never got a 60-day notice, let alone a 30-day notice, and they automatically say we was reporting 90 days late. Inaccuracies. So now we come in here and we challenge the inaccuracies of this reporting agencies stating that we never got a 60 and we never got 30 days late. So to our knowledge, we never was late. Now, another thing that we see is we go to each credit agencies. Now you see how they say it. August that this person paid on time, but look at Equifax. Equifax say they was 90 days late in August. Guess what, y'all? That's inaccuracies. So what we do, we'll highlight that and say, okay, if I paid on time in August by TransUnion and Experian, why is Equifax said I was 90 days late? Okay, now let's go here. Now September, I was late 120 days. Experience said I was 90 days late. TransUnion said I was 90 days late. All that is inaccuracies, y'all. So right here, based off these two inaccuracies, you can get this whole account wiped down into being current and get all these late payments deleted off your credit report because this is inaccuracies. And the same thing when we're dealing with late payment, we go line by line. We look at the account number, 9,000, 90,000, look the same, cool, 3535, it's reporting the same. Here we go with the inaccuracies, blank, blank. How would they know? They verified it in May. We come right here, last active date, May 31st. They got December 1st, 2025. Then they got July. So this is inaccuracy. So we'll add that to our dispute. Same thing with the date reporting. They said May 31st, and then this one said the 1st. So this is inaccuracy. They both got the same story, but this one don't. So somebody ain't telling the truth, right? So these two right here, last time this account was open was March 1st. They got the same story, Equifax and Experian, but TransUnion got the wrong story. So somebody ain't telling the truth. So right here, the balance owed, they got it together. So we move on. That's reporting accurate. We come right here. Now when it comes to payment status, look what happened. They said I was 120 days late on TransUnion. Then they said I was late 180 days on Experian, and then they said I was late 120 days. So right here, they didn't get their stories right. Experian said we was late 6 months. They said we was only late 4 months. So this is inaccuracies. So this is how we get inaccuracies removed. It's very well can be us. We don't have to say that these accounts not us, but we go line by line. Remember, late payments got to say the same thing across the board with all three credit agencies, y'all. All three. And if it don't say that with all three, it is 100% inaccurate, and you can get things removed. Now, you need to be able to get these negative items removed, especially when you want to go to funding, because you can't have no late payments when it's time to go get funding, no negative items when it's time to get funding. So we got to make sure we clean up all our prep work. And the same thing, it's going to be the same thing with these student loans. They going to all be late. As you see, 120, 180, 120. So I hope you guys help. I hope this helped you guys. And this is how you properly read a credit report line by line. You just got to point out the accuracies. You got to be your own lawyer. You can't trust your credit report in the hands of the credit agencies when they doing this for money. You doing this for your livelihood. They doing a defamation of your character, reporting inaccurate information knowingly and willingly. That's against your consumer rights, and that's against the law. So I hope this helped, y'all. Man, study your credit report and make sure you address those inaccuracies. I'll see y'all on the next one.